Uh, Thank you very much. Assalamualaikum and good morning. Today we will continue our topic number 4 with the portfolio and uh, diversification, risk diversification. Okay, hari ini kita akan sambung semula topik number yang keempat berkaitan dengan portfolio and risk diversification. Okay, atau penyebaran risiko. So, what is the portfolio? Apakah maksud portfolio? Portfolio adalah uh, any collection or combination of several financial assets or the investment at the same time or at the same period. Okay, apa tujuan? What is the aims or what is the focus of the portfolio? Main objective of the portfolio is to reduce risk exposure. Okay. Tujuan utama kita membuat portfolio ataupun kita membina portfolio adalah untuk bertujuan mengurangkan risiko. Okay. The main purpose when we develop the portfolio is to reduce the risk exposure. That is the main thing. That is the main aim. That is the main objective why we develop or why we build the portfolio. Okay, setakat itu boleh ikut saya. Okay, then you can follow me. Okay, number one. Number one, what is the portfolio? Portfolio is the combinations of several financial asset, or we call it the investment in one portfolio for the same time or the same period. Okay, the objective of why we develop the portfolio is to reduce the risk. Okay, please pay attention. What I'm telling you now is to reduce the risk, not to eliminate at all the risk. Maksudnya, kita hanya dapat mengurangkan risiko, tapi kita tak boleh menghapuskan risiko tersebut 100%. We only can reduce to the minimum, okay, the risk exposure, but we cannot eliminate at all the risk. The risk is still there, but we try to reduce the exposure of the risk. Okay, now I want to show you the illustrations of the portfolio. Sekarang saya akan tunjukkan bagaimana ilustrasi ataupun gambaran portfolio berkenaan. Okay. Can you see this whiteboard here? Alright. Let's say katakan kita we are the investor. We are investor. And now we want to develop the portfolio. Let's say this is the portfolio number 1. This is the portfolio number 2. And this is the portfolio number 3. Okay. Now we have 3 portfolio. Okay. Portfolio number let's say portfolio A, this is portfolio B, and this is the portfolio C. So what is the meaning of portfolio? Portfolio is the combination or the collections of several financial assets. Katakan now we are the investor. Let's say in the group of A portfolio, we have let's say a stock or the share from apa dia? Dari bidang telecommunications. Okay, portfolio A is from telecommunications industry. So in the portfolio A, we have let's see stock number 1, stock number 2, or stock number 3, and this is the stock number 4. Let's say this is a Maxis, DG, Telecom, or apa lagi, Red One, for example. Okay, this is the portfolio number 1, portfolio A. The second one is the portfolio B. Okay, portfolio B. Let's say we have a share from consumer products. Okay, daripada consumer product. Let's say this is the telecommunications industry. This is from consumer products. Okay, kita ada saham nombor 5, 6, 7 dan 8. Okay, from the consumer products. This is from, let's say, constructions ataupun plantations. Okay, di sini kita ada plantation. This is a plantations portfolio. We have number 9, number 10, and number 11, and number 12. Okay, we as the individual investor focus our investment in 3 industry here, which is telecommunications, consumer products, and plantation. And now we have about 12 stock or 12 shares. Okay, and we build our portfolio based on the industry. Okay, industrial communication, consumer product, and plantation. Here, in overall risk exposure, that there are no industry can perform well in the same time or in the same period. Maksudnya tidak semua industri akan mempunyai prestasi saham yang baik untuk semua masa. Sometimes telecommunication can reach a very good performance, but at the same time, consumer product did not perform well. And at the same time also, the plantation just remains stagnant, as remain stable in the industry. So these telecommunications perform well. This is not very good performance. This is the remain stable. So the portfolio of the telecommunication will cover the loss from the consumer products and also from the plantation. So in overall, the investor will enjoy not so high profits, and also when the industry not perform well, the economy not so good, the investor also not face a big lose big loss in their investment. That is why we built the portfolio. In the finance, we call it diversification or risk diversification. Is kalau you pergi Google, you akan jumpa satu philosophy or falsafah. The philosophy in the finance is do not put all the egg in one basket. Okay, kalau you pergi ke Google, type search the keyword risk diversification, you will see the philosophy behind the risk diversification, which is do not put all the eggs in one basket. Jangan letakkan semua telur tadi. This is the telur. Okay, this is the egg. in one basket. Why? Because if anything happen to this basket, the other basket will cover the loss from this basket. That is why we built the portfolio. The aim, the objective of the portfolio is to reduce the overall risk. Okay? Setakat itu boleh ke? Okay? Can you follow me? Now? Boleh faham? Okay. Jangan kita letakkan semua saham di dalam satu portfolio. Bermaksud kita pecahkan portfolio kita kepada beberapa basket supaya apabila anything bad happen to this basket, we have two more to cover our life. Okay. Sekiranya satu basket tersebut not perform well, meaning that we have two more baskets to cover our investment. That is the objective of portfolio and risk diversification. Oh, okay. What is the diversification? Diversification is to spreading out the investment to reduce the risk. Okay, ini saya dah cakap tadi. So the market reward diversification, the main motive holding multiple assets or creating the portfolio of stock is to reduce the overall risk exposure. The degree of reduction depend on the correlations among the asset. Okay, nanti kita akan lihat lah. What is the correlation? Correlation is the hubungan. Correlation is the relationship ataupun korelasi ataupun kita cakap perhubungan atau perkaitan antara satu saham dengan saham yang lain di dalam satu portfolio yang sama. That is the correlation. Okay. There are two type of correlation. Number one is the positive correlation. Number two is the negative correlations. Okay, ada dua jenis korelasi. Satu korelasi positif, satu lagi adalah korelasi negatif. So mari kita lihat what is the positive correlation. Okay, kalau anda nampak di sini, you can see here the positive correlation, the directions of movement of this line is the same direction. The line move to the same direction. That's what we call positive correlation. Okay. Kalau anda nampak sini, line ini bergerak ke arah yang sama. This is the positive correlation. Okay. This here, when the company perform well, okay, dua stok sini, nampak dua stok ni. Let's say we pick portfolio A. Okay, we pick portfolio A. All the stock move to the same direction. This is what we call positive correlation. Or semuanya rugi. Okay, loss all the stock here in the loss positions. Okay, the stock move to the same direction, whether profit or loss. That is what we call positive correlations. So what is the negative correlations? Negative correlations when the stock move in the different directions. Okay, you can see here, perfectly negative correlated. The portfolio is perfectly diversified. Correlation one, we can abolish the risk, meaning that one stock goes up and the other goes down. That is what we call the negative correlations. Okay, Here, let's say one stock goes up, okay, one stock profit, and the rest is negative or loss. Okay, any loss, let's say here is the positive. Okay, can you see this illustration? Boleh nampak ilustrasi ini? Okay, this is these two we call it the positive correlations, and this one we call it the negative correlation. Here, when the stock move to the same directions, okay, uh, either positive or the profits or a loss. This is what we call the negative correlations when the stock, when the share move in the different directions. Satu, one goes up and the rest is goes down. Okay. Okay, setakat itu boleh ikut? This is what we call the correlations. Okay, ada dua jenis. There are two types of risk in the market. Okay, ada dua jenis risiko di dalam pasaran. Boleh saya padam ini? Saya nak padam ini. Saya ini dah. Okay, you Google dulu. Google type of risk in market. Okay, ataupun dia panggil sini type of investment risk. Alright. Dah jumpa diagram tersebut? Diagram ni lebih kurang macam ni. I want you to label this diagram. Alright. This is what we call the total market risk. Okay, total market risk. Mari kita tengok ada tak? Ni. Okay. I want to you to understand this diagram. Okay. This is what we call systematic and unsystematic risk. Okay. Ada dua jenis risiko. There are two type of risk in the market, known as the systematic and unsystematic risk. Ada dua jenis risiko di dalam pasaran yang kita kenali sebagai systematic risk dan unsystematic risk. Okay, you tengok sini. Boleh nampak kan sini kan? This is what we call the related to the company unique risk. Ataupun nama lain di sini kita panggil dia unique risk. Okay. Atau kita panggil dia unsystematic risk. Okay. In the blue here, okay, dalam lorekan biru di sini adalah kita panggil dia unsystematic risk, or we call it the diversifiable risk. Okay. Ataupun juga dikenali sebagai company unique risk. Okay, this side we can reduce the risk, we can control the risk, we can diversify the risk. Okay, here You can see here, we can reduce the risk. Okay, kita boleh kurangkan, di sini kita boleh kurangkan risiko tersebut. Nampak kan? Kita boleh kurangkan risiko tersebut melalui proses apa yang kita panggil diversification tadi, melalui proses portfolio tadi. Okay. But here, okay, here we cannot reduce the risk. Okay, bahagian kuning di sini, okay, the yellow zone here, we cannot remove the risk at all. This risk remain in the economy, remain in the market. Okay, here we call it the systematic or non-diversifiable risk. Okay, this is, we cannot control the risk. Here we able control the risk, and we can reduce the exposure of the risk. Here we cannot remove the risk. We cannot control the risk. This risk remain in the market. Alright, setakat itu boleh ikut saya. Okay, ada dua jenis risiko. There are two type of risk. Number one, we call it unsystematic risk. Number two, we call it systematic risk. Here we able, okay, we can reduce the risk. Here we cannot reduce the risk. Alright. Okay, this is the explanation. The market risk, systematic risk or non-diversifiable. This type of risk cannot be diversified away. Okay, this is the orange one. Okay, the market risk. We cannot diversify the risk. Here, number two is unsystematic risk, or the blue one. Okay, this we able, or we can control, and we can reduce through diversification process. Okay, ataupun kita panggil dia diversifiable risk. Okay, company unique risk. Company unique risk di sini, di bahagian ni, ataupun unique risk ataupun unsystematic risk. Risk affect only a specific firm. Risk can be reduced or eliminated simply by the diversification process. Diversification yang bulat-bulat tadi yang kita buat portfolio tadi. Example, a company labor force goes on strike, the outcome of unfavorable litigation and CEO changes. Okay, market risk di bahagian ni, which is we cannot control, or we cannot remove away the risk. Risk affect all firms because it is beyond the control of the investor and the firm. Systematic risk reflects microeconomic shock and target aggregate behavior of the economy and measured by beta. Okay, market risk measured by beta. Example, unexpected changes in interest rate, tax rate, change, or turbulent political event and foreign competition. Okay, saya nak tanya. Masih sama saya sekarang? You all masih boleh ikut saya sekarang? Now you still with me? Alright. Katakan. Let's see. Contoh, the example of COVID-19 pandemic. COVID-19 pandemic. Which category we can classify the COVID-19 pandemic? In the unsystematic risk or in the systematic risk? Okay. Kalau saya ambil contoh masalah pandemik COVID-19, di kategori manakah kita akan letakkan pandemik tersebut, risiko pandemik tersebut? Di blue zone or in the blue zone or in the orange zone? Susan, do you think unsystematic risk? All right. Susan, are you on the line? Can you
Yes, sir.
explain more why pandemic COVID-19 is the unsystematic risk?
I'm not very sure with the answer is it correct or not, but then I think
Never mind. It's okay.
because we can like do something to prevent it to minimize the risk. So that is why I think it is the unsystematic risk because it can be reduced.
Alright, thank you very much.
Okay, thank you.
Yang lain macam mana? The rest? Okay, Anissa. Oh, why did you say pandemic COVID-19 is the systematic risk? Different opinion from the Susan just now.
Sebab
Okay, Anissa, are you on the line now?
yes. Can you hear me?
All right.
All right. So I think it's systematic because for the for the systematic risk type, one of the examples are the unexpected changes in interest rate. For example, like caused by war or tax rate changes. So during COVID-19, it's like a global pandemic. So I think it's similar to like something like war, where we don't really expect it. So it's a systematic where it affects all the firms. I think that's my reasoning.
How about the rest? Thank you, Anissa. One more. Sekarang now is draw 1-1. We want tie break of point. One more opinion, please. Seorang lagi untuk kita pecahkan kebuntuan kita. Sekarang kita di tie break point, keadaan 1-1 sekarang. Okay, Susan, say this is unsystematic risk we can control. But Anissa say this is the systematic risk we cannot control. Okay, we cannot diversify this risk. So we want the other one opinion. Anyone, please? Ada siapa nak berkongsi pendapat? Alright, kalau tak ada, saya terpaksa pilih seorang. Anissa and Susan just now is from Bachelor Science IT. So saya nak panggil daripada uh, semester 2 Santian. Santian, are you here?
So saya pun rasa systematic risk sebab kita tak boleh control.
Okay. So Santian also agree with the Anissa systematic risk. Yes, this pandemic COVID-19 is the systematic risk. Okay, because when COVID-19 pandemic happens, all the industry, tadi telecommunication industry, plantation industry, consumer product industry, manufacturing industry, meaning that all people, industry or ordinary people like us, students affected by this pandemic, meaning that we cannot control. This pandemic is the beyond of the company control. Okay, meaning that when this pandemic happens, all the industry, all the people, all the factories affected. Semua manusia, semua orang terkesan atas kejadian pandemik ini. So this pandemic is the systematic or non-diversifiable. We cannot control. This pandemic is beyond of the company control. So what is the example of the unsystematic risk or diversifiable risk or company unique event? Contoh-contoh unique risk ataupun unsystematic risk is the risk only happen to the, let's say, to the telecommunication industry, but not happen to the plantation and not happen to the transportation, not happen to the consumer product, not happen to construction, but only happen in telecommunications only. All right, this is what we call the unsystematic risk ataupun company unit risk. Satu jenis risiko hanya berlaku terhadap syarikat tersebut saja. That's what we call the company unit risk. Tetapi risiko tersebut tidak berlaku terhadap syarikat-syarikat lain di dalam negara. That's what we call the company unit event, company unit risk. Only happen to the specific company and not happen to the another company. Let's say kita katakan labor strike ataupun tunjuk perasaan ataupun apa, mogok. Okay, katakan pekerja penerbangan melakukan mogok. Okay, pekerja penerbangan labor strike force in the airways industry. Okay, pekerja penerbangan melakukan mogok. Ini bermaksud hanya industri penerbangan sahaja yang terkesan terhadap mogok pekerja tersebut. Tetapi industri-industri lain tidak menerima kesan akibat daripada mogok daripada pekerja penerbangan. Industri lain seperti industri pembinaan, industri perkilangan, industri peladangan, industri telekomunikasi dan sebagainya tidak terkesan dengan mogok daripada pekerja-pekerja sektor penerbangan. hanya sektor penerbangan sahaja yang menerima kesan tersebut, tetapi tidak kepada sektor-sektor lain. That's what we call the unsystematic or diversifiable or company unique event. Juzian, can you follow us now? Alright. Boleh ikut saya. So, di bahagian biru ni, this blue zone, we able to reduce the risk, but not here. This pandemic, when the government instruct us ataupun issue the PKP or PKPB, whatever the MCO, all the industry shut down. Okay, let's say government say here in Sinto, all the institutions, all the education institutions, all the company, all the sector should stop their activities. So, bermaksud apabila kerajaan mengisukan arahan MCO, bermaksud semua industri, education, manufacturing, plantations, semua kena tutup. Bermaksud this is what we call the systematic risk. Right. Okay, kita boleh sambung sekarang. Okay, how to measure the market risk? Okay, sekejap. Blue zone plus orange one, this is what we call the total risk. Okay, bahagian biru tambah bahagian kuning ini kita panggil dia total risk. Okay, total risk. So how we measure the market risk? Okay, bagaimana kita nak mengukur risiko pasaran? Once the individual asset return and market return obtained, a graph is prepared to see the relationship between the asset return and the market return. Okay, macam tadi lah, y-axis and x-axis. When the return is plotted, draw a line best fit for all the stock return relative to the market, which is we call the characteristic line. Okay, the slope, dia punya kecurunan tu of the characteristic line is called beta, measured by the firm market risk. Okay. Kemudian nanti kita. This is the slope ataupun kecurunan, lengkungan ataupun garisan kecurunan. This is the slope. Okay. This slope draw in which most plotted share here. Okay. Garisan ini melalui titik-titik ataupun plot-plot yang terbanyak di sini. Okay. Yeah, how we read this graph? Specifically, beta is measure how an individual stock return respond to a change in market return. Beta adalah sensitivity ataupun dia punya sensitif terhadap risiko. Okay. Market beta is 1. Okay. Market beta normally is 1. Okay. 1 mean average market risk. The stock is no more or no less volatile than the market. When the beta more than 1, okay, apabila beta lebih daripada 1, itu bermaksud volatile or more volatile, meaning that more sensitive. When the beta is more than 1, meaning that the market risk is sensitive or more volatile than the market. When the beta less than 1, meaning that less volatile, kurang sensitive, less sensitive than the market. Okay. When a beta is 0, meaning that there are no systematic risk. Ingat lagi, what is the systematic risk? Systematic risk adalah di bahagian ini. Okay. When the beta is 0, meaning that there are no market risk. Boleh ikut sekali tu? Okay. How we measure the beta? Okay. Bagaimana kita nak mengukur beta? Beta is the sensitivity tau. Beta adalah berapa sensitif perubahan terhadap risiko. The portfolio beta indicate the percentage change on the average of the portfolio for every 1% change in the general market. It is a weighted average of the individual asset beta, and asset has its own beta. Okay. So portfolio is jumlah the total invested in the portfolio, and P here or the beta here is the stock change. Here, this is the, ini kalau kita lihat di sini proportion di sini ataupun nisbah di sini ataupun kita panggil dia pemberat. Okay, this is weighted here. Kalau anda kira di sini, jumlahnya adalah 100, 2, 4, 7, 9, and 10. Okay, jumlahnya sama ada. Kalau anda perasan jumlahnya sini adalah 1.0, okay, ataupun kalau dia dalam bentuk peratusan, this is 100%. Okay. Okay. Kalau dia dalam bentuk peratusan, ini adalah 100%. Okay. Ini beta. This is beta. Beta mean risk exposure. Okay. Beta mean risk exposure. Okay. This is the equations. Okay. This is the formula how to measure beta. Ataupun kita panggil sini adalah CAPM. Capital Asset Pricing Model. Okay. Capital Asset Pricing Model. Investor required rate of return is the minimum rate of return necessary to attract an investor to purchase or hold the security. Okay. Required rate of return for all assets is composed of two parts, the risk-free rates and the risk premium. Okay, saya nak tanya, I just want to make a bit questions. Okay. Adakah anda masih ingat perbezaan? Do you still remember the difference between expected rate of return and required rate of return? Do you still remember what is the expected rate of return and required rate of return? Adakah anda masih ingat perbezaan di antara apa tu, pulangan dijangka dan pulangan perlu, expected rate of return and required rate of return? Saya nak panggil, I want to call Nazifa Zamri, non Nazifa Zamri. Nazifa, are you here? Okay, Nazifa. Apa perbezaan di antara expected rate of return and required rate of return?
Saya rasa expected ni dia apa yang kita harap kita dapat. Selalu lebih lah. Kalau required ni apa yang sepatutnya kita dapat.
Okay, thank you very much. Siti Nur Zuraida, are you here? Siti Nur Zuraida,
Yes, sir.
okay, what is the difference between expected rate of return and required rate of return?
Expected ni kita expect benda yang rate yang kita cakap apa? Expected ni kita dah expect benda tu, kita dah kiranya kita dah set benda tu untuk dapat return. Kalau required ni benda tu memang required untuk dapat return.
That's all.
Ha.
Thank you very much. So, in decision making, okay, dalam membuat keputusan, in the decision making process, yang mana perlu tinggi? Expected rate of return or required rate of return? Okay, saya nak panggil Siwi, Ki Siwi. Ki Siwi,
Yes, sir.
are you here? Alright.
Yes, sir.
In the decision making process, okay, because we as the financial manager in the company, one of our tasks, one of our job is to make decisions. Okay, there are two types of risks here. There are two types of return here: expected return and required rate of return. Which one should better than the another one? Yang mana satu lebih tinggi daripada satu yang lain? Expected rate of return or required rate of return?
I think that it depends on the investor because the expected return is based on the given price and the growth potential, and the required return is based on the requires on assets and given the risk. And when the investor is the person who can afford the risk, they might choose the required return. And when the investor is like expected to earn on their assets, and they might choose the expected return. This is my opinion.
All right, thank you very much. Now I want to call Chris, sorry, Chastity Santi. Chastity, are you here?
Yes, sir.
So, dalam membuat keputusan in the decision making, which one is called, which one that we prefer more? Expected rate of return or required rate of return?
Pendapat saya pilih require return sebab require return ni kita mesti ambil. Mesti dalam mesti dalam target required daripada expected. Thank you, sir.
Okay, thank you very much. Apa maksud risiko? What is the meaning of risk? Okay. Sekali lagi saya balik pada apa maksud risiko. What is the meaning of the risk? Ini dia. Sorry, return. What is the meaning of risk? Okay, risk is the potential of variability in the future cash flow. What is the meaning of risk? The risk is possibility that actual return differ from our expected return. Can you see here? Expected return. Actual return will differ from our expected return. Ulangan sebenar tidak sama dengan ulangan yang dijangka. Okay, because in the investment, the concept is high risk and the high return. Back to the definitions. Expected return. Expected return is what we hope, what we expect, what the investor hope to get, or what the investor expect to earn. That is expected return. So what is the required return? Required return is the minimum. Okay? The minimum return that we need, that we require when we invest. Okay? Daripada ni. This is the benchmark. Boleh nampak ni kan? Boleh nampak? This is the benchmark. Benchmark here is the saya cakap tadi minimum. Okay? Ataupun di sini kita panggil required rate of return. The minimum line here is the required rate of return. Okay, this is the minimum that we need. Okay, this is the minimum that we need. So, investment, we expect more. Investment, we expect more. We should expect more. Let's say the minimum that we need here, that we require here, is 10%. This line is the 10% line. As the investor, we expect more. We expect 20%. So, we accept any investment more than 10%. Let's say 20%. We accept. If we expect the investment only can give to us, let's say 5%. Okay. If we expect this investment only can give to us 5%, we check. Because we need at least 10%. Right? We need at least 10% return. This is what we require. If the investment can give to us 20%, we accept. If the expected rate of return higher than required rate of return, we accept this investment, this project. If the expected rate of return less than required rate of return, we reject this investment, this proposal of investment, this proposal of project and whatever. Setakat tu. Okey, setakat itu boleh ikut. Now, clear. This is the basic one. Okay, this is the basic one. Okay, you have to understand this one first before we can proceed to the how we calculate the beta. Because when we calculate the beta will give us the result. Okay, the beta will give us the result, and we have to compare the result. Okay, we have to compare the result. The result is higher than required rate of return, or the result is lower than required rate of return, and you as the financial manager in the company will make the decisions to accept or to reject based on this kita cakap philosophy, okay, based on this decision making process. Correct? Now we want to calculate. Now we want to calculate here. Okay, this is the formula. Okay, required rate of return. We want to determine. Okay, we want to determine the required rate of return here. Boleh nampak sini? Sekarang kita nak kira required of return. Okay, kita nak tentukanlah berapa persen ni. Tadi saya contoh ya, 10% ni contoh. Okay, now we want to calculate the required rate of return here. So how to calculate the required rate of return? Risk-free rate of return plus risk premium. Beta and market risk premium. Okay. The formula is required rate of return. Ingat ya, the sign or the symbol of the required rate of return is R. Okay. Kalau ada bar di atasnya adalah expected rate of return. This is R. So RF, what is the RF? Okay, RF is the risk-free rate. So beta, okay, ini adalah beta, and market risk, ini market risk. Okay, ini market risk. Inilah market risk ada di sini, market risk. Nampak ni market risk. Okay. Ini adalah risk-free rate ini. Okay. Ini adalah risk-free rate. So RF plus beta RM minus RF. Okay. Risk-free rate, boleh ikut sekat tu? Risk-free rate is the rate of return or discount rate for risk-less investment that typically measured by the treasury bill rate. Okay, kalau anda nampak, if you see in the questions refer to the treasury bill. Jika anda nampak di dalam soalan menyatakan ada treasury bill. Treasury bill, we assume zero rate, zero risk. Kalau anda nampak dalam soalan treasury bill. Treasury bill ini adalah bebas risiko ataupun kita panggil dia risk free rate. Because of what? Treasury bill is one of the instrument of money market short term, low risk, low return, and treasury bill issued by the government, fully guaranteed by the government. That's why treasury bill is risk-free rate. treasury bill is zero risk. Setakat tu boleh ikut? Can you follow me? Saya ulang. Treasury bill. Treasury bill adalah salah satu instrumen di bawah pasaran wang. Dulu-dulu kita belajar what is the four characteristic of the money market. Money market is the short term, low risk, low return, high marketability, and high liquidity. Ingat lagi? Money market. Money market characteristic. And treasury bill is one of the instrument under money market. Treasury bill issued by the government and fully guaranteed by the government. That's why treasury bill zero risk, or we call it risk-free rate instrument. Okay, so risk-free rate ataupun RF tadi merujuk kepada treasury bill. Risk premium, setakat ini boleh ikut yang number one. Kalau anda nampak treasury bill, so treasury bill is the RF or risk free. Ni risk free ni. Ni risk free ni. RF, risk free. Refer to the treasury bill. So what is the market risk premium? Market risk premium, which is the return required for investing in any risky asset rather than risk-free rate. Ini kita panggil the market risk lah, market risk. Okay, market risk yang you nampak tadi lah. Ni market risk ni. Ini market risk, nampak ni sini market risk. Di sinilah market risk ataupun pemberat risiko yang diberi di sini. Di sini adalah market risk. What is the beta? Beta is the risk coefficient which measure the sensitivity the particular stock return to the changes in the market condition. Pernah jumpa kan perkataan coefficient ataupun coefficient variance, CV. Ini yang anda kira, ini dulu nampak ni sini, coefficient of variance, CV. Nampak di sini, CV, coefficient. Right? Sikit lagi. Okay, cuba buat benda ni. Now, let's calculate this one. Required rate of return. We want to determine the required rate of return. So, di dalam kita panggil capital asset pricing model. Okay, sama-sama. HD Corporation growing computer software developer which is to determine the required rate of return of asset Z which has a beta 1.5. Beta di mana beta tadi? Beta 1.5. Here beta. The risk-free rate of return is 7%. This is a risk-free rate. The return on the market portfolio is 11% here. So 7% plus 1.5 beta, market risk 11 minus RF, here is 13%. Dapat? Semua dapat ni? 13%? Can you calculate this one? 13%? Alright. So if the expected rate of return is 15%, 10%, is the stock underpriced or overpriced? Okay, saya cakap tadi, this is the, sekarang saya tukar. Now I want to change this example. Here, boleh nampak ni kan? Anda tengok sini dan tengok juga di whiteboard. Now I want to change the situations. here now is 13%. Okay, 13% is the required rate of return. Here, 15%. Okay, here now is here now is 15%. Here now 10%. Okay, nampak situasi macam ni sekarang. Soalan dia, is the stock underpriced or overpriced? Let's say 15%, 50% more than 13% required rate of return. And now it's 10%. The 10% is less than 13%. Nampak ni kan? Cepat sikit. Yang mana satu overpriced, yang mana satu underpriced? If a security is above the SML, 13%, boleh nampak kan? Sini boleh nampak kan? Boleh nampak ni, this one. Ini adalah garis dia. Ini garis dia. Sekiranya SML, if the security is above the SML, it is underpriced. If a security is below the SML, it is overpriced. Boleh nampak di sini? So kalau di sini, yang mana satu overpriced, yang mana satu underpriced. Okay? Kalau contohnya di sini, boleh nampak kan? If the security is above the SML. Boleh nampak, baca dulu. Sekiranya sesuatu stok tersebut berada di atas garis SML, security market line. Alright? Boleh nampak kan? Yang mana satu underpriced, yang mana satu overpriced. Sekiranya dia berada di atas, this is the underpriced, this is the overpriced. Okay, 10% is overpriced. 15% is underpriced. Boleh? Ada lagi tak? Ya. Okay, itu yang terakhir. What is the CAPM? CAPM, Capacity Asset Proposal, is to measure the investor required rate of return, provide the risk-return trade-off in which measure term beta. Beta rate of return on the stock risk-free rate premium for the systematic risk. Okay, SML is the graphic representation of the CAPM, where the lines show the appropriate required rate of return for a given stock systematic risk. Okay, contohnya macam inilah pen ini, okay? This marker pen. Okay, this marker pen. Di pasaran, harga sebenar marker pen ini adalah RM1. Okay. Market say this price of this marker pen is RM1. let's say kedai A, from the shop A, sell this pen for 2 ringgit. Okay, 2 ringgit. And the another shop B, sell this pen 50 cent. Okay, 50 cent is the underprice. Okay, and 2 ringgit is the overprice. Okay, itu masuk dalam perniagaan lah. So ini ada di bawah harga sebenar. Okay, ini harga sebenarnya. Harga sebenarnya. Kalau dijual di atas harga sebenar, this is what we call the underprice. And if the stock sell below the SML, this is what we call the overprice. Okay, I think that's all for